Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. It seems like all doom and gloom right now, doesn't it? A lackluster earnings report. Let's be honest and agree that NEO did make some mistakes with Onvo. When it came to putting out Onvo stores, perhaps they should have sold Onvos in the NEO stores to begin with, or at least have some of them on display there to show that it is being made by the same company, NEO, in order for people to understand that it's close to a premium brand. And the reason for that is because in China, the sentiment is still that if it's a Chinese EV company, that you should somehow still be afraid of it, the Chinese people. That sentiment, like I said, is changing as we see NEO outsold the premium brands in that segment. But also, at the same time, when NEO has built its reputation to be able to do that. And some of you may say, well, what about Onvo? So Onvo is a brand new brand to the Chinese people, and a lot of them still don't know that it's part of the NEO company. And at the same time, the NEO brand has been losing sales because people are waiting for that new platform. So what did Morgan Stanley have to say about all of this? Well, Morgan Stanley, Tim Xiao, published a new research note yesterday on EV, the maker NEO, on Friday, immediately after the company reported its fourth quarter earnings, reaffirming a bullish price target on the stock. You heard that right, a bullish price target. And the reason for that is, well, let's get into this first. The analyst reiterated an overweight rating of $5.90 price target on the Shanghai-based EV manufacturer, implying an upside potential of 31% based on the current trading price of $4.50. And like I said, the analyst did say that NEO has made some mistakes with, like I said, with the Onvo, and with not trimming enough fat, which we're doing now, as the CEO just started about 2 weeks ago. In a research note, the analyst said the net loss came in higher than the firm's forecast, while noting that revenue was in line with the low end of company guidance between 19.7 billion and 20.4 billion. So it was in line with that. That's why when the market overreacted yesterday, I bought some more again, because I understand and I see what's coming, and we'll get into that. NEO reported a net loss of 7.1 billion RMB in the fourth quarter versus 5.1 billion loss in the third quarter of 24, higher than our expectation of RMB 5.8 billion loss. Full year losses arrived at 20.7 billion. So in a statement, NEO said it expects its financial resources to be sufficient to support its operation over the next 12 months. Based on our ongoing concern and liquidity assessment, this is the company saying this, based on our ongoing concern and liquidity assessment, which considers our business plan, including revenue growth, working capital management, and the ability to raise funds from banks under available credit quotas when needed, we believe that our financial resources, including our available cash and cash equivalent, restricted cash and short-term investments, cash generated from operating activities, and funds from available credit quotas will be sufficient to support our continuous operations in the ordinary course of business for the next 12 months, NEO stated. Does this mean you should panic? Hold on. The company reported a 15.2% increase in revenue in the fourth quarter, while net losses widened to 7.11 billion yuan, which is 0.98 billion US dollars, which is bad. And vehicle margin rose year over year to 13.1%, which is good. Our margins increased, remaining flat compared to the previous quarter, while the vehicle gross margin of 13.1% fell shy of 14.1%. The non-vehicle GPM surprisingly turned positive and advanced group GPM to 11.7%. Shao noted that the OPEX ratio was largely steady, with research and development expenses jumping 10% from the third quarter, and selling, general and administrative expenses grew 19% sequentially amidst Envo channel expansion. And this was the big problem, the Envo expansion with the stores. Of note, NEO booked an RMB 528 million non-operating loss in the fourth quarter, largely reflecting losses from revaluation of its overseas related assets. And for the first quarter of the year, said it expects to deliver between 41 and 43,000. The company delivered 13,863 units in January and 13,192 in February, under its NEO and Envo brand, bringing total deliveries to 27,055 as of February 28. Based on full quarter forecast, NEO expects to deliver 13,945 and 15,945 in March, well below previous communicated targets of 20,000 deliveries for the Envo sub-brand alone. And a lot of the problem came in with Envo, the marketing, bad marketing. And like I said, a lot of it is they should have had at least Envo, the L60s in a NEO store. So when people walk in, they can understand that it is part of NEO. A lot of people still don't know that. Perhaps they will implement that now as well. Morgan Stanley noted that March estimates imply a moderate uptick of 13.6 thousand units for March versus 13.5 monthly average, while revenue guidance suggests a low teen sequential. The analyst also said all eyes remain on the NT 3.0 facelifts. This is going to be our moment where we start going back up. The analyst, let me say that again, analysts also said all eyes remain on the NT 3.0 facelifts, which will come with a lot of the in-house technology. And like I was saying in my previous video, the steer-by-wire may also come in them. The New World model, which is the driverless technology that will be the game changer and leading in the industry, will possibly come in all of our NEO vehicles. It says, and to a greater extent, the restructuring of cost reduction, referring to ongoing cost-cutting measures that the CEO started implementing about 2 weeks ago. Starting from April and throughout the year's end, the group will start delivering several new models and refreshed versions across the three brands, NEO, Envo, and Firefly. And this is one of the main reasons why the CEO said that the Firefly will be right out of the NEO stores. And why not? Just like the Envo, it's a premium boutique little EV. Even though it's considered a sub-brand, it is a premium brand. It is a premium little EV. So earlier this week, the company announced the extension of the partnership with the battery giant CATL. CATL is investing $346 million as of now in NEO Power, the charging and battery swap unit of the EV maker. We also saw that CATL doubled down on Mirarity, which is the asset manager for NEO Power. And this is why I've always said minor speed bumps. And yes, we've made some mistakes along the way. No one can deny that. However, I see where we're going forward, and I will keep buying shares into NEO. This is why the hedge funds keep buying. This is why the pension funds keep buying. Because while you see the dark clouds in the sky, like the great Warren Buffett said, if you look at what the company is getting ready to do with the future guidance, it's about to rain gold. So I hope you guys found this video to be informational, inspirational, and motivational. If so, guys, do not forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the game is played in Wall Street. And like 50 said, we get rich or we die trying, guys.